Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Archer Aviation, ticker symbol ACHR. And so here I am recording this on Saturday, October 5th, after Archer closed on Friday the 4th at a price of $2.98, being up about 1.33% on the day and going up a penny in the after hours. And so I wanted to go over this chart because I think it's pretty interesting, and I think that there is a pretty nice trade setup on it that I personally am partaking in a very small position, wanting to explore, this thesis that I have. And so that is basically that, we saw this double bottom here, big move to the upside. And so the low over here was hit on May 29th. That was at a price of $3 a share, as you can see marked by this thick white line here, $3 a share. We did recently just get below it. On September 26th, we hit a low of $2.82. So in my view, I don't think we should be going lower than that level. I think that was a fake out breakdown. But, of course, I could be wrong. And if we do go lower than that level, I think it's going to go notably lower. And I think then it is good to cut, the loss there, put a stop loss. And so I have one at $2.80. And so if price does go down to $2.80, I plan to exit my position. Like I said, it's a small position, and this is really just kind of testing this low as, a line in the sand. I don't want it to go lower than that. If it does go a little bit lower to 280, I'm going to cut losses. And so, with that being said, the reason why I think that this could be going higher is it does look like we are in this downtrending parallel channel. So the white lines here, that's based on, it looks like the low from October 30th of last year, as well as the low from May 29th. And then the upper pivot point is the high from July 16th. And we can see that we do have, the top bumping into resistance up there and the approximate bottom of that channel being tested as support. And we're right around the middle of that channel after coming down from the top side. But, I do think that this could be continuing lower to test the bottom of that channel. But like I said, that's why I have that stop loss there at 280. And so what I am hoping is that we are consolidating here before we break to the upside. I suspect, looking at this, it's more likely to break to the downside because we have had this downside move. We are consolidating. We got this pretty massive reversal candle on Thursday coming down over 8%. But, the trading on Friday got this hammer candle, big wick to the downside, does suggest that buyers are stepping in. So that could be pretty good. We don't want to see closes below 282.1. That would definitely be suggesting further downside. I would say with the close on Thursday being at a price of $2.94, that does engulf a lot of the trading here, actually all of the trading there, as far as the downside goes. The only closes that we saw lower than that were these two here when we were forming a bottom before we got a, kind of little bounce to the upside going up about 10%. So with this big reversal candle coming down 8%, it does seem more likely that this is going to break down, that my stop loss order will be filled at 280. But if not, if this is a bottoming signal that we're seeing here at the end of the week with that big wick down on Friday, I could see this potentially getting to the top or near the top of this parallel channel. But I do think it's good to note it hasn't always gone from, bottom to top like it has here. Sometimes we do get some moves, as it trends down. And so we saw this pretty big move from the high of July 16th. Did get a little bounce in there. And so taking a Fibonacci retracement from that high from July 16th down to that low that we hit on September 26th, I get these three levels that I think are going to be important to be paying attention to. One is the 50% retracement at $4.14.5. The 618 is at $4.45.8. And then the 786, ideally, price gets up to there. That is at $4.90.3. But actually, looking at the chart here, I'm thinking that we might be seeing some resistance here right around $3.50. So maybe that would be a good level to trim at. I can add the other levels to this Fibonacci retracement just to see where they lie. We got the 382 there at 383.3. I don't think that one looks too significant, but the 236, that is at $3.44.6, corresponding with the lows over here, as well as, the wick high from September 13th, which was at a price of $3.43 hit on that day. So that does seem like, we could be bumping into some resistance there, although we already have. So, I feel like this is more likely to be breaking down. So that is why I think having a stop loss is a good idea, but maybe it does wick down to 280. That is the bottom, and then it takes off to the top. So definitely a possibility, but I think that if it does head down to the bottom of that channel, that is a risk of more than 30% to the downside. So I think it's good to have a plan if it does start to break lower. Risking from current price coming down to around, let's see, 280, right around there. That's a 6%, 6.4% risk to the downside versus that, about 30 to the bottom of the channel. So I think it is good to have that kind of plan, but maybe, we are putting in a double bottom here with this higher low that we saw on Friday. So that low on the 26th, 282.1, the low on Friday was 287. So maybe that's kind of like a double bottom, but a higher low, just like we saw back over here. So maybe just on like a smaller time frame, maybe this is a double bottom and we're going to see some moves to the upside. So, like I said, I think ideally getting up to the 786 around $4.90 or right around $5 a share, I think that would be excellent. But it's quite possible that we do find some resistance around 350 with that 236 here at about $3.45. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.